in the same building as well in Bangkok as Thomas, who's been there 15 years. But Thomas shared with him the obstacles that Americans were running into financially. His clients were coming in doing taxes. They were sharing with him, hey, we're having these type of issues with banking, with our retirement accounts, different things like that as well. There are also a lot of issues that we face with we see with American expats and their girlfriends or wives. If it's this hard for us to work and achieve financial success outside of the United States, we just take care of our everyday transactions. How hard is it if this person who's not an American has to deal with financial institutions back in the United States? But I wanted to start off. I'm going to introduce Thomas and let him speak first more about this, and then I'll speak again afterwards after he talks about the taxes. Thomas doesn't always talk about his background, but Thomas' father was a CPA. He was raised up doing taxes with his dad. He gave him that exciting job, to do those numbers. But Thomas went on to work for Jackson Hewitt. He started off as a tax advisor there. He became the international tax advisor there. And he'll tell you more about that, how he became an international tax advisor. But ultimately, Thomas was there for almost 6-7 years. He was the international guy located. He got all the international questions from the over 1,000 offices. So it's rare that I haven't seen Thomas get stumped really, since he's already got 1 million questions probably from those different offices working at Jackson Hewitt. He now has a master's in international tax and finance. So you can get your taxes done anywhere in the world, and anybody can do them. You can do them, make mistakes. Why not use somebody who has this level of experience and who doesn't mind talking to the IRS? Thomas comes in the office every day at 6:30 to call back to the United States to speak with the IRS, and he typically probably leaves at about 3:30, 4 o'clock, so he can beat the traffic and get home at a reasonable time. And I stay a little later. Well, in a separate building here, but I'll introduce you to Thomas Carden, and he'll talk more about international tax issues.
Thank you. Yeah, growing up in a tax firm household, not the most exciting at times. But although the first lesson my father ever taught me was don't fear the IRS. And he said just as long as you're communicating with the IRS, they're generally going to be happy. And he said, when you get really good at it, you're telling the IRS what they actually need to know, because contrary to a lot of people think the IRS would know everything about this, their error rate when you used to be able to call and ask the IRS a tax question was over 50% being incorrect. This is when you're calling the experts to this. In fact, it got so bad that now, if you call the IRS and you ask a tax question, they will literally tell you, we don't offer answer tax questions. You have to call an outside advisor to do this. The world of taxation in the United States is, the regulations are somewhere around 100,000 pages now, regulations. And it gets more and more obscure, and especially when we come into the area where you guys are all at, living overseas, the rules can get to be counterproductive, cross-firing, and sometimes their advice is completely wrong to this. And one example of this is there's what's called the United States-Thailand Tax Treaty. Okay, this was signed in 1996. This has several advantages we'll go through later on about this, but one of the things I'm going to talk about specifically is what's called the technical explanation for this tax treaty. Okay, this is oddly very important in how the IRS views you guys at times incorrectly. Okay, the tax treaty was signed in late 1996 between the United States and Thailand. Okay, the U.S. also forms every year what's called a model tax treaty document about every 14, 15 years. An earlier part of that year, the model tax treaty was signed, and they do what's called a technical explanation. And we've actually had a gentleman post about this. And the technical explanation says blah, blah, blah. The technical explanation, though, is generally how to describe it. Has no binding power, but it actually says, it's sort of an easy guide to help you try to understand this. But one of the big issues here is they took the model tax treaty technical explanation and almost word for word split it over to the Thai tax treaty because it was signed in the same year. Now, because they've done that, they've missed several things at very highly technical standpoints in the technical explanation for the Thai tax treaty that are fundamentally wrong. And one of the big examples of this is, everybody have IRA, 401k here in the room? Retirement income? Okay, so we'll give a little off this. Okay. One of the big advantages of the Thai tax treaty is found in Article 20. Okay. Article 20, and I'm going to paraphrase this to this very heavily, states that when you are a resident of a particular country, only that country has the right to tax you. Okay? Now, what that means, on your pension income. This is pensions and annuities. Okay? Social Security is a different article stated, which dates back to the United States. But pensions, now this means IRAs, SEPs, Simples, KIOs, Roths, everything of this. What that means is that when you are resident in Thailand, Thailand is the only state that has the ability to tax you on that pension. So you can take all these forms of money out of the United States free of U.S. tax with several different caveats on this. Okay. The second advantage of this is Thailand has a territorial tax system, which means that if you do not remit that money into Thailand, into a physical bank or structure in Thailand within 12 months, Thailand will not tax you as well. Effectively, this means that you have zero tax on your retirement income if you structure it properly. Excuse me. Now, the argument of this is, the technical explanation is fundamentally incorrect. Because technical explanation says it cannot be done for U.S. citizens here, because of what's called the savings clause of Article 1. Article 1, it says only certain things for U.S. citizens can be used in a tax treaty under normal circumstances. However, what the technical explanation misses later on in the tax thing is that there's a separate subclause deep inside there that I don't publish on the internet because we don't let that go do this, but you come into our office, we'll show you exactly how that works, and that allows you to use Article 20 for this. So by using sophisticated planning and reading beyond what even the IRS knows, you can literally retire free of U.S. tax and Thai tax if you structure things properly. Now you think, how can that work? We've gotten refunds in excess of $1 million because we can go back 3 years and argue with the tax authorities of the United States. They will issue a refund back 3 years on this. So if you've been say you're living on $50,000 or $60,000 a year, you can go back and get a refund for the taxes paid for the last 3 years. 2021, 2020, and 2019. You have a question or? Okay. Yeah, I think you might have a question.
No, I'm just thinking.
Okay. So, yeah, you do have a question.
Is that also related to getting your 401k before 59.5?
Literally, oddly, the rules are, it's a total free of U.S. tax, and the penalty is considered a tax by the IRS. So when we put zero taxable distribution before 59.5, it zeroes out the penalties as well. 10% gone as well. You can literally change your entire retirement source income off of this stuff in a real way. And it makes retirement in Thailand a real area of paradise. Part of this hinges on the fact that the savings clause itself is unusual in that normally the savings clause says the United States reserves the rights to tax its citizens and residents as if this convention treaty did not come into place. Okay? That's not what this particular tax treaty says. It effectively says that Thailand and the United States reserve the right to treat their citizens and residents as if this convention had not come into effect, which means that for all intents and purposes, nobody could ever use a tax treaty to do this. And that's why, in general terms in the IRS, you'll hear a lot of absolutes in the IRS. But buried inside the code will be tiebreakers. And perfect example of this is when people have children with a divorce. Who has custody of that child for U.S. tax purposes? Because, as we discussed a little bit beforehand, earlier, the amount of currency here for children is huge. Parents will fight over who has the rights to get these tax credits for parents, because they can be $5,000, $6,000, $7,000 per year. So the IRS has a set of what are called tiebreaker rules of tests. You get this test here, you get that test here. That defers who gets the child. And the tax tree has a system built into it that most people aren't aware of, when we're reading this, of tiebreakers. And this really has to do with where you live, how much time you're spending in Thailand, these kinds of situations to it. But it's cooked into it. But the technical explanation was kind of a casual reading to it, and it missed that particular section to this. But that's the joy of the IRS when you work international. The IRS will not understand the majority of what you guys have to do. You call in the IRS and you say, I'm living overseas, and then the person will generally go, wow, they're overseas, people can do that, do this. But, out of 360 million Americans, about 8 million of us live overseas, do this. So that's why you're still obscure enough where the IRS doesn't adequately put you in place like this. But there are also some advantages. And one of the biggest advantages of living overseas is what's called the additional child tax credit. I don't think anybody here has child children, but we're going to broadcast this, so I'll go through with this as an example. Okay. Many people will have done their taxes incorrectly. Okay, we'll do them the simplest way, which is called using a foreign earned income exclusion. And if you have children, you don't get anything because it zeroes out your income level to this. Now, in Thailand specifically, you pay more tax than you would in the United States. So you can use the taxes you would pay in Thailand to offset the taxes you would owe in the United States. So you don't have to use a foreign earned income exclusion to get to zero taxes if you work in Thailand. You can use the foreign taxes you paid in Thailand to zero that number out. Now, by doing some rather complex calculations on this and how that fundamentally changes the structure on this, because you now have positive income, these people, especially the teachers in Thailand, are able to get about $3,000 per child back for 2021. So you've got a teacher out there who's making maybe $16,000, $17,000 a year. We've gone and they have 2 children with U.S. Social Security numbers. They get $6,000 back last year in credit. And they can go back and amend the prior 2 years and get $1,400 back for each of those 2 years. So you're $2,800. They're getting in excess of $10,000 refunds back from the United States by literally changing how you prep the tax return. That's how difficult this stuff gets and how technical it is. One little thing like that can tweak you dramatically. Yeah. Now, one of the things that Thailand's also doing, as I mentioned earlier, is that they're going to do a lot of stuff on digital nomads. Because they're trying to entice digital nomads to come here and live and work with some visas. One of the Thailand's issues, and when you do expat tax, you have to look at both sides of this. You have to look at how the country you're going to be resident is going to tax you as well as you as well. More than likely, what the digital nomads don't realize is that's going to subject them to some type of tax. They're not just going to come in here and be, woo, I'm able to live in Thailand with no issues. I've got this digital nomad visa. They're going to have to report some income that they're earning here, because fundamentally, where you reside, where your feet stand when you're doing work, is generally the country that's going to have first right to tax to this. So the digital nomads, and this is really what is coming on to this, but the digital nomads also have a separate issue in this, especially if you're a U.S. citizen. When you're self-employed to this and you don't have an outside company, you're going to be subject to self-employment taxes back in the United States. And let me give you how this works. Okay, if I work for a company, okay, I make $100,000 US a year. I'm subject to the foreign earned income exclusion, and I can just use that, 0 US tax liability. Okay, and because I'm employed by a foreign employer, I don't have to pay my Social Security tax to the US. Nothing to do with that. Okay, but I become a piano teacher, and I'm seeing clients out there, a bunch of different clients out there, and I'm doing this on my own time in my own business entity, truly self-employed, I can still exclude $100,000 of taxable income tax, but I'll be subject, still have to pay my self-employment taxes, which is a Social Security contribution, at 14.4% back to the United States. So, self-employed when you're overseas is not a whole lot of fun, because you will pay the local taxes and you'll pay that 14.4%. Now, it's not a huge deal when you're making money, and especially if you have children, you're going to get tax credits back that cut that down. And at a certain point in your life, you do want to have at least 40 quarters in your Social Security to be able to get benefits, the minimum benefits later on. So you can use that to your advantage. And at some point in your life, if you've only spent 5 or 6 or 7 years in the United States working as an adult, you can set up your own small business, be self-employed, and contributing to Social Security enough to allow you to get that 40 quarters. So you can manipulate these figures to your advantage. You can also sit there and effectively find somebody who can employ you here in Thailand and become a subcontractor to them, to where they handle the contracts to the people you're doing work with. You're an employee of that individual or that group. This also helps you get a work permit, which is always the issue in Thailand, and you're also then free of the 14.4%. So if you give these guys 2 or 3% of your revenue to be quote unquote employed, get the work permit, you've actually saved money over being self-employed and stuff. So there's a whole lot of ups and downs on how you do this, with ways of this, to it. But there can be some tremendous advantage. First and foremost is that advantage of doing proper planning and allowing your retirement income to be free of U.S. tax. So you've got a lot of challenge. But this also, though, and this is where my friend Ken Brown comes into. We have probably once or twice a week someone come in who has said, my U.S. account is being closed. My checking account's being closed, my bank account's being closed. I can't open an account anymore. I can't, or probably one of the most worst cases of this scenario was we had 2 gentlemen who had moved over here up in Chiang Mai, and they were with one of the brokerage companies. And he couldn't call his regular broker, so he called into the main 800 number, this investment broker. The 800 number, so somehow that conversation that these guys were here part of the year in Thailand. Okay. Not even full time at that point. Part of the year here in Thailand. Okay. The brokerage company froze their account immediately. Okay. Where they could only sell to this and pull cash out. They could not contribute any more money into the brokerage account, and they could not transfer from one asset to another. Okay. Now, you think, man, that's really bad. The brokerage company wanted to fire their investment broker because he should have known that these people were spending 4 or 5 months a year in Thailand. They had to literally, these 2 guys are really nice guys, they literally wrote letters several times to the brokerage company to protect this guy's job and said, listen, we had never told him we were even visiting Thailand. He had no way to know this. But the mentality in the investment world in the United States is they can't know your client when you as an American live overseas. And so they look at you as being a liability that the U.S. government is going to come in and fine them because they can't service your needs adequately with this. So one of the big challenges you guys have is, how do I even open up a bank account in the United States? How do I open up an account overseas? Because when the Foreign Account Tax Compliance Act passed in 2010, 2011, do this, it forced every bank, every other financial institution in the world to have to report your investment information back to the United States, or be subject to a 30% fine on every dollar that goes through the wire system in New York to this. This is very specifically why When you walk into a bank overseas, they don't want you as a client either. To them, you cost them too much money, you were too much risk, and the U.S. government coming behind you. So they were literally purging U.S. citizens as well to those. Okay, and Ken mentioned this a little bit. I want to give the CEO of Business Class Asia, a gentleman named Mark Kirkham, a little bit of credit. Several years ago, we were having this problem, and I couldn't find a bank for my clients who would have a bank for. I couldn't find somebody who could help them do retirement account. And I had a meeting with Mark Kirkham, and I said, listen, most financial institutions are running away from American citizens. The company that does this will do very, very well. We have a lot of clients, and I can teach you the compliance regulations that you have to go through. Because oddly, there's no rule in the U.S. government says for banks or financial institutions. You can't be overseas as a U.S. citizen. Nothing. Nowhere does it say that. And nowhere does it say that as a U.S. citizen in Thailand, you can't have a bank account either. They're just so worried about their investments or their risk, they don't want to take you on. And to give Mark Kirkham credit, he stood up and saluted, and he even recruited Ken to come in and help with Americans here in Thailand. My skill set's pretty rare, but honestly, the skill set of being able to help you open accounts and stuff and deal with all that is probably rare from what business class is.